With the stock market suffering its worst week since 2020 this past week due to many different factors, including the pandemic's continual impact on the economy, rising inflation, and the fears that led up to the FOMC meeting that just took place this week, where the market was waiting to see if the Fed would move forward with raising interest rates, the market started to freak out. All the major stock indexes, including the S&P 500 and the Dow Jones, have taken a major hit, causing stocks to plummet as people are selling in fears of another major market crash. And I'm sure many of you watching may be fearful as you are watching your portfolio continue to bleed out. That is, if you haven't sold already. Well, in this video, we're gonna talk about what's going on with the market and how to prepare and move forward coming up. Welcome to the Journey of Finance. My name is Cedric, and today I really wanna have a timely discussion about what's been going on in the market and, more importantly, discuss some ways that we can respond to the impending market crash or correction that we seem to be experiencing. I know many of you, especially if you are new to investing, are probably very nervous to see your portfolio going down day by day and wondering if you should just cut your losses and sell out to protect your portfolio from any more losses. And if that is you, I do strongly encourage you to just take a deep breath and consider some of the things that I'm gonna bring up in this video that may save you from making an emotional decision that could hurt you in the long run. Now, before we move on, if you find this video valuable, then do me a huge favor, hit that like button on this video, and even better, share this video with anyone you know who could benefit from watching. So before we take a look at the charts to see what the market is currently doing, let's briefly talk about why the market has been spiraling down. Beginning in March of 2020, in response to the onset of the pandemic, and the financial markets selling off due to the fear of the unknown, the Federal Reserve began to take actions to keep money flowing in the economy and to also provide stimulus to millions of Americans to minimize overall damage to the economy. Some of these actions including lowering interest rates to practically zero, implementing quantitative easing, or QE, by purchasing a huge amount of treasury bonds and mortgage-backed securities every month in the open market to ensure these markets keep running, and of course, putting stimulus checks into the hands of millions of Americans. Despite the huge spiral down that the markets experienced in March of 2020, the financial market started to forge its way back upwards within just a matter of a few months with the inflow of new money into the economy. Over the next 2 years, the financial markets kept raging up as many businesses were starting to do well, people had money to spend in the economy and in the markets, and things were looking good despite the ongoing pandemic. But then, towards the end of 2021, during an FOMC meeting, Fed Chair Powell hinted at the possibility of tapering the Fed's spending and raising interest rates in phases in 2022. In response to this, the markets began to get a bit anxious about the news, which began to negatively impact the stock market. In addition to this, tech stocks began to plummet, with Netflix leading the way with a 20% plunge in a single day. And we didn't even mention crypto yet, but I'm hurting there too. With a culmination of all these factors, in the midst of battling a new variant, investors are getting fearful and selling off their assets to move to a more risk-off position to minimize losses and to see what the market will do. And now with the FOMC meeting having just taken place yesterday, there's even more uncertainty with how the Fed wants to proceed with raising interest rates throughout the year and how to handle the current inflation problem. So with all of the volatility in the markets right now, with no sign of it easing anytime soon, as individuals on a journey to financial independence, what should our response be? Do we buy into the fear and sell out of the market and wait for it to recover? Do we just sit on the sidelines and try to pick the right time to get in the market? Let's talk about it. Okay, so we're gonna take a look at the overall stock market and how it's been doing the past couple of weeks. And then we're gonna zoom out and we're gonna take a look at what the stock market has done over the past 2 years during the pandemic. And then we're gonna zoom out even further and look back even a couple of decades. And this will help us to have a macro level approach to how we're looking at the stock market and see its overall trajectory. So this is really gonna set the framework and the foundation for us figuring out what to do in response to this current correction or potential market crash. And so let's start with where the stock market is today. And as you can see, today is the 26th of January, and you can see that in the past day, it has sold off, and that is partly or probably mainly because of the FOMC meeting that just took place. I think that overall the market did not respond too well to it because I think there's still a lot of uncertainty. Chairman Powell didn't actually give any definites in terms of how much the rate hikes would be later on this year. But the good news is, at least in the view of the market, is we're not raising interest rates right now. They're keeping it at zero. So that at least is good. But still, you see a little bit of a sell-off because there's a lot of fear and uncertainty with that. And we also know, at least according to the Fed, I mean, we already know, but the Fed is saying that inflation is still quite high and is probably still going to be a little bit higher over the next few months or however long. So anyways, you see where the market is now, and you see where we began at the beginning of the year. We were up pretty much at an all-time high, but like I said, when in doubt, zoom out. So let's go back maybe 5 years and let's take a look at what the market has done in the past 5 years. You can see that all the way back from 2018, we're going up, and there's a little correction there. That was during the talks of interest rates being raised during that time, and also in the midst of the China trade war. We recovered from that quite quickly. And then you can see right over here, COVID entered the picture, and then that's when there was a big crash and massive sell-off. And so during this 1 month period of time, this is where the Fed pretty much kicked in and said, look, we're gonna have to keep the economy going. They decided to print more money by purchasing more treasuries and also mortgage-backed securities, and to put stimulus into the hands of the American people. So as you can see, even though the market crashed in 2020, this didn't really last too long. Within a matter of a couple of months, we got back to the point of where it fell, and people are feeling better. Stimulus is getting into the market. So the stock market is doing quite well. And then you get all the way up to where we are today. So when you zoom out at least a couple of years, you can see that even though we fell down, it's not as bad as what it could be, because we didn't fall all the way down to this point right here. Now, even better is, let's zoom out even further, and we're going back a couple of decades here on this chart, and we're going up, and then 2000 hits, and we're in the dot-com bubble, crashes down quite slowly. It took a couple of years to really get down to this point right here, and then going back up, things are doing better. We just recovered from 2000, and what happens? The mortgage crisis of 2008 happens, the housing crisis. We were climbing back up, and I want you to notice that it took about 5 years from 2008 to about 2013 for the stock market to fully recover at the point of where it started to crash in '08. The stock market did make its way back up. And then from here, we just had pretty much a raging bull market. And so if you started investing at any point here in 2013, when things were starting to come up, then you're probably feeling very good about yourself and your portfolio, because everything is pretty much turning to gold. You know, a couple of corrections here and there. So the point that I'm trying to make is the overall trajectory of the stock market is up. There are going to be cycles, there are going to be corrections, and there's going to be bull markets, and there's going to be bear markets. But overall, the stock market historically has always gone up, and it's probably going to continue to go up. And I'm going to make a bet that we're probably going to be okay. We're probably going to, over in the long term, we're going to keep going up. So have that mentality, and that's going to set the stage for everything else that I'm going to share in this video. The first thing that we need to ask ourselves is, am I a trader or am I an investor? Because if you're a trader and you try to capitalize on timing the market by entering and exiting positions more frequently, then the principles that I'm gonna mention in this video won't really apply to you. But if you're like me and you're investing for the long haul, then definitely pay attention. So with that said, as investors, I'm going to give you 5 timeless tips that will not only help you to get through this stock market crash or correction, or really any crash or correction in the future, but it's going to be a tremendous help in giving you the opportunity to create life-changing wealth. The stock market goes through ups and downs, phases and cycles. This can be generally categorized by the terms bull market, which is when the market is doing well and people are putting their money into the stock market and the market sentiment is positive, or bear market, in which, you guessed it, is the opposite of the bull market. Things are falling down, investors are more fearful, and the trajectory is downwards. It's easy for investors, especially those who might be new to investing, to experience a bull market for a few years and feel like it's never gonna end. But the truth is, the stock market will never continue to go straight up without coming down at some point. There are always going to be external factors that will impact the state of the markets, including how the economy is doing, geopolitical situations, or maybe even a pandemic. But the good news is, if you zoom out, the overall trajectory of the market is up. So having an understanding of this will help you to mentally be prepared for the various different market swings. Also, you can be comforted in knowing that a bear market or even a market crash will eventually recover. Let me just say this right off the bat, that there is not a single seasoned economist, hedge fund manager, or any person that can accurately time the market or predict where the market is going, period. Now let me clarify that yes, there are many different indicators in the economy and global landscape that can point to a certain trajectory, and if you are a seasoned investor or economist, you may be able to use these indicators to predict where the market may be heading. But it doesn't mean that you are guaranteed to be right. A lot of investors, especially those who lean more towards trading, try to time when the top of the market will be and sell to make a profit. Then once they sell and the market crashes down, then they try to buy back in at the very bottom of the market. But this is extremely difficult to execute because you have to get lucky. Most investors, with the exception of a lucky few, end up hurting themselves because they didn't time the market correctly. When it comes to market timing as long-term investors, for most people, it is better to hold your positions in a down market and ride it out until at least you've recovered your unrealized losses. Speaking of unrealized losses, when you're in a position, whether it's a stock, index fund, or ETF, and your portfolio value is down in the red, you may have a loss on paper, aka an unrealized loss, but you haven't truly lost money in reality because you haven't sold your position. In other words, your asset still has time to recover. It's only a true loss or gain when you sell your position. So when we are in a weaker market and our portfolio is bleeding out, we have to fight the urge to sell out of fear of losing more money, because the moment we do, that's when we will incur a realized loss. Remember, as investors, we are investing for the long haul. That's why you never want to invest money that you would need in the next 5 years. That's because a 5-year time horizon based on history will likely be enough time to recover from your unrealized losses, or at the very least, break even. Always remember this: once you sell, you'll have a 0% chance to recover your losses and are 100% guaranteed to lose. But if you don't sell, you have a high probability of recovering your losses and beyond. I love the quote by Warren Buffett that says, "Be greedy while others are fearful, and fearful when others are greedy." In the case of a down market, this can be a great time to buy stocks, funds, and crypto at a deep discount. When everyone else is scared and selling off their positions, causing the prices to plummet, this may be a great time to purchase more shares of your favorite stocks or funds. Remember that life-changing wealth is created in a down market. If you have the cash and liquidity to be able to purchase more assets when they are low, you'll make bigger gains when the market recovers. One of the best strategies to implement in a down market is dollar cost averaging. This will allow you to continue to buy great assets at a discount, and also will help you to lower your overall cost basis, especially if you purchase some of your positions when they were a lot higher in price. Using a DCA strategy by investing some more into the market at a lower price allows you to buy more shares, which will benefit you in the long run. And the last tip is to hold on, because it's gonna be a bumpy ride. At the end of the day, I can't tell you what you should or should not do with your portfolio or how to invest. But what I can say is, if you're someone who aspires to generate and create wealth through investing, it's gonna be a bumpy ride. Things may look bad now, and I don't know how long it's gonna last. It could literally be a week, a month, or even a year. But always remember that the market will do what the market does. If you pick solid investments and funds and decided to invest for the long haul, this is literally part of the journey. Try to replace your emotion with logic and zoom out and remind yourself that the market will reverse and go back up. And for all of us crypto holders, the same fundamentals applies to us. The difference is that the crypto markets are way more volatile. But if you have some really solid picks, it's a good time to hold on and stack up on some more. Well, I hope this was helpful and is a good reminder to stay strong, focus on the fundamentals, and to have patience. Smash that like button and share this video with everyone you know so that they can make the best financial decisions during this down market that's going to benefit them in the future. Subscribe to the channel if you haven't already, and I'll see you in the next one. Peace.